Let me see it go shine, go shine. 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 Let me see it go shine.
Everybody having a good trading week so far?
Good morning. Yeah.
So the way we do the 4-hour trap zone, we're going to get into that first, is you need to go to a 4-hour chart and you need to find Friday. So you can literally do this as soon as market closes Friday, or you can do it Saturday or Sunday. Before the market opens back up, you'll already have this marked off. So we'll go to the 4-hour chart. We're going to look for Friday. So we're going to, what is today? Tuesday. We got Monday, Sunday, Friday. So what you're going to do is you're going to find the second to the last 4-hour candle. And then we're going to mark the high and low of that candle. So we have Sunday. This is why you need your session breaks. They're called session breaks on TradingView. You will go to your settings. You can click more settings. And I'm going to show that again. This is if you click settings at the bottom. If you go to the one at the top, it's going to go straight to this screen. And you'll go to events, and then you have session breaks. That's these blue lines right here. You can see them go on and off when I check it and uncheck it. You want to make sure that's on because that helps you find the separate days and where it begins and ends. So Friday. Once you see this line right here showing the end of Friday and Sunday, you're just going to go back to. So 1, 2. Go back 2 candles. You're going to find this candle, and then you're going to mark the high and the low of that candle. So you come over here to your tools, get your lines, click the little arrow, get you a horizontal line. Mark the top of the candle, only the body. And if there's any that don't look right, hopefully we'll find some so I can show you what you'll do if maybe it's a tiny candle or something like that, and you can just improvise. I'm sure we'll come across some. I'm going to make mine orange. Mine's a little thinner. You can make them thicker as thin as you want with the pixel. All right, I'm going to go back a few weeks. So we're going to go back, mark up at least maybe a month or two worth, and then I'll go over how they work. So you got one here. Now we're going to find the previous Friday. This is our previous Friday. 1, 2. Okay, this is perfect. It looks like a doji. So what I would do is just go to the previous candle. With this, I improvised. Since the low of the previous candle, it already has a line at the bottom of this candle. And then right here, I wouldn't even mark this up because there's just going to be a bunch of lines inside of this. So that right there, I would just keep it how it is. I won't even mark this one up personally. Sometimes you just got to improvise with it because you get the general idea. You just want a zone marked off where you can basically have a support and resistance. All right, so we're going to go back again. We got Sunday, Friday right here. So Sunday, here's the blue line, your session break. We're just going to go back 2 candles, 1, 2. Again, the bottom of the previous candle is actually the top of that first candle is at the bottom of this. They're pretty similar. So I could just leave that right there instead of putting an extra line. And what I'm going to do is just mark the top of this candle. So I'm going to go back. Where's that candle? Yeah, right here. I'm going to find that candle and I'm just going to mark the top of it. And I got an orange line there. Got another Sunday, Friday right here. So we're going to go back 2 candles. That's 1, 2. If I go up to the top of this candle, there's a line close to it. And if I want to, I could do something like adjust this and just put it there. That way there's like a zone in between these. And it's just a general area. It doesn't have to be perfect. And then I'm going to mark up the bottom of this candle. And we're only counting the body of the candle. You don't need to count the width. And I'm going to put a line there. I'm going to go back again. Sunday, Friday. So up here is the Friday 1, 2. This is the second to last candle. So we're going to mark the high and the low of this candle. And if you get it, what I'm doing so far, go in there and mark this up as I'm doing it. That's all you're doing is finding the second to the last candle on Friday and marking the high and the low of that candle. Sunday, go back 1, 2, bam. That's our candle.
What's going on, Fly?
What's up? What's up?
And why is the second to last Friday though? Why what that mean?
I'm not gonna lie to you. What that is the end of the week on
I
a
mean,
Friday,
yeah. So
and
it's second to
and
last.
it's
My bad, go ahead.
yeah, you go ahead because I'm not sure what you're asking for sure.
Yeah, my bad. I meant to say like what the second to last candle for that on the Friday. That's what I meant to say.
Really, this is where the end of the week comes in at, and this is where accumulation ends for the week. And sometimes when the market opens back up, since it's Friday, there's sometimes a gap. And really, what they're doing is they push out of a zone when the market opens back up on Sunday. And so what we're looking to do is since we're basically marking up the end of the week trap zone where the phase ended for the week and it just consolidated until the market closed. And so we're looking to see does it hold the trap zone, the accumulation, does it break out of it or does it continue to trend under it? I'll get into that as I show it. But that's really what it is we're just marking up the consolidation zone for the end of the week.
So far, you've went back 5 weeks.
Okay.
So are you going to continue? How many weeks should you go, or are you not looking at just the previous week
Because it's
to
a
mark
four
your
hour,
zone?
I wouldn't put a limit to that. It depends because my chart is marked up so much that sometimes I don't need to mark it up because I would be marking up pretty much the same zones. Um, and we use the 4 hour chart so that you can get a higher time frame and mark up better zones. You want to go to where, like, if I make it look like this, if I can mark up these highs, and if there were spots lower, go to the lows, like down here. If I was to ultimately mark this up as much as I wanted, I will come back to this point and these high points, because what's going to happen is, as I trade on a day-to-day basis, if I get to a point where I'm not seeing any trade zones, I need to go look for previous areas where I possibly could mark up at. So, for example, if I don't mark none of this up and then this goes up, and now I'm noticing there's no trade zones, I would just go look for the highs and look for those Fridays where I can mark up zones so that I can have trade zones again. So if it gets to the point where you just noticing you got a blank chart as far as the trade zones go find those previous highs and lows and see if there's anything to mark up. Because if once I get into it, you'll start to see why we're even doing this. And it helps you basically find support and resistance. That's why we do use the 4-hour chart, because it's a higher time frame. So you're covering more chart. Like if I was to do something like this on a daily chart, I will cover more space, because we're going to break down to 1 hour, 15-minute charts or whatever time frame you're trading on your entry anyway. I hope that answers your question. If you just want to go back as far as you can to where you got a high marked off, a high and a low marked off on your chart. And see, this is the daily chart. So I would want to come up to here, or at least up to here. And then something like down here. And if price starts to break this area, then I will go mark up the trade zones in this area because it's lower again. And if price breaks this area, I will come up here to this time frame. I will go to the 4-hour chart around this time of the month, the time of the year, the calendar down here, and mark that up. I want to do 2 months. Unless it starts to look cluttered. All right, I'm gonna stop here. Now this depends on what time frame you're trading on. This works good on the hour on down because we marked it up on a 4-hour chart. What we're looking for is to see what price does when the week opens up after this is marked up. Right here. I marked this up. So Friday, I marked this chart up. Sunday comes in. We have a trade zone marked up. What we're looking for is to see if it breaks out above or breaks below and how it holds the trade zone. And it's best if the market comes and retests that area. So this is something else that's part of an entry, part of a reason to get into a trade that I pay attention to. It broke out below the zone. It came up back into it. And then it didn't break above. It came and broke down below. So once it did that, this candle came up and retested it. And then it sold after that. And so what we could have did was got into a sell here or here when this candle formed and stuck with your pip goal, have your trading plan, 20, 30 pips. And you could have placed your stop loss above this trading zone. Y'all with me?
Yeah.
I'm going to show what that looks like. And what we want is for a candle to close below the zone or open above the zone. So it coming up above, we would need a whole candle to close above. I'll show an example of that when we get to it. So right here, this one closed below after it attempted to go inside and not break it and come back down below it. This right here would have been our entry at the open of this candle, which would have been there. So I'd put my entry in. I would have found my stop loss. I wanted a little bit below, above. Give it like 10 pips extra on Euro USD, 5 to 10 pips. So it was at 28. We're going to go 5. We'll take it to 33. 33 pips. I kind of went a little above. Let me see. I'll get it right at 33. 33. Now I have my stop loss. My risk to reward is a 0.85, so I'm going to make that a 1. It's not doing it how I want to do it. There we go. Got it at a 1. That would have been my 1-to-1 risk to reward ratio trade. I'd have entered this trade, put my stop loss up here, TP down here. As you see, it would have came and hit our target. Since I have other trade zones marked off, I can use these as TPs. So if I want to go for a higher TP, I can also come down here and use these as my targets. With the 1 risk to reward ratio, you also want to count the pips once you have it set. And make sure you're hitting your pip goal. Now, this is 33 pips, so we good to go, 20, 30 pips. But if I wanted to measure out the rest, I can just come in here and use the measuring tool. That would have been 80 pips if I wanted to go for the bottom of this trade zone. And you would just mark that up and add your TPs, set your TPs, set alerts for them, whatever you need to do. So that's how I would have traded this coming out the week. Friday, so Monday went down. We're trading a stop hunt on a Monday. So it came down, consolidated, and then it bounced up. Since I have this trade zone right here, I can safely say that it's holding this zone. The same way like when it came here and it didn't close below and it broke back above, and then this candle closed above. If I was trading that trade zone right here, I could have got in right here and took it up to the next trade zone. If you notice this whole space right here, all it did was bounce back and forth between the trade zones. That's why we marked this up like that. That alone is part of the strategy and the entry itself. It came here, hit this trade zone, held it, closed above, showed me a bullish candle, could have got in right there and took it right here. Did the same thing here. It came here, it didn't close above, came right back below it, got right here and took it right back down. It bounced a little bit and it perfectly hit it back right here. And we could have traded this back and forth. I call that ping pong.
Can you mark
So,
up one more week where you start at the after your session break? How you have your stop loss, and because that part I did not understand.
oh, I'm not done with it yet. I'm going all the way down to the 15-minute chart. So I'm done marking up for now, unless you need to see how I marked up, which is the second to the last 4-hour candle, high and low of that candle. So
Yeah.
right now I'm going to keep showing examples of how you would actually trade it now that our charts are marked up. And I
Okay,
want everybody, go ahead.
because you mark up in the 4 hour, you analyze in the 1 hour, and you trade in the 15. Is that
You could
correct?
do all of that. It depends on what kind of trader you are.
Okay.
If you're a high time frame trader and you might trade strictly off 4-hour candles. So I'm going to show all of them.
Okay.
I'm doing the
Thanks.
4-hour right now. You mark up on the 4-hour. I'm going to show the 4-hour. Then it's already marked up. So then I'll go to the hour and then I'll go to the 15-minute. So you can, what the lower time frames are going to do is just give you earlier entries. But the concept is all the same on any time frame. All right. So what do we get? I'm looking for that same. Okay, this was that same week. Traded it short here, and then it held this zone, and you could have took it up to here. It would be the same concept. So let's say if I wanted to take this buy after we already traded Monday and took it down and caught 30 pips, and then I noticed this railroad track here off of the trade zone, and I want to catch this buy on the next candle. I'm going to put in my long forecast. It has a stop loss below the trade zone. That's worst case scenario. This was 44 pips. And so I'm going to do a 1-to-1. I'm going to put my risk to reward on the 1. It's already set here at a 1. And if I look at where it's at, it's looking like there's a high chance of hitting it because it was before the next trade zone. So I don't even have to completely take it to the next trade zone up here. I could get out right here because my risk to reward is a 1-to-1 already. So I could have took this trade. Now, if I want to take it all the way up to the trade zones to see if it'll break out, I could take it here, and that's another target. And anything after that, if I wanted to go above and beyond, I could have got a 1-to-2, where now my TP is twice as big as my stop loss, and those targets would have hit. That goes along with how you manage your trades, taking partials and at different TPs. So you want to set your alerts 20 pips, 30 pips, 50 pips, and make sure you're putting your stop loss and profit and things like that along the way so that you have a risk-free trade. That's going to be a whole nother separate class in detail anyway. All right, so I took this buy up to this trade zone. That target hit. Now I'm watching what does it do once it hit this trade zone, where we got a breakout here, but it didn't close above. It just wicked right back down. So that's showing a strong sell. It already came here and wicked up high when we marked up the trade zone, and now it came and retested that and just wicked back down. So far it looks like it wants to make an M. Every time it breaks out, when the candles close, it came and did a sell right back down. This almost did an evening star. And then it broke back down below the trade zone. Closed right here. It's in consolidation right now. It's going back and forth. It kept going back and forth. But what it was doing was respecting this high up here. Because every time it broke above the trade zone, it came right back down into it. Right here, this could have been, I could see how this would be a buy. Because we got a railroad right here back and forth. And then you probably could have took that buy, but what's giving it away is the wicks as well, where it's holding is high. So this is showing a rejection. All that is part of the candlestick Bible. Reversal candlesticks. They're all wicks up here. Every time it came up high, it wicked down and it turned into another doji. So the stronger move was once it finally got back below this trade zone and came up and retested it, we had a sell here. And then it came and hit this trade zone, and then it broke below that and continued to make its way down. Because all I see right here is one big M. We got an M here, and it kept holding the zones and kept breaking below. And now it's going zone to zone. So in a situation like this, and this is why I like to hold mines 2 to 3 days, if we wait for it to break below this zone and look for the candle to close below it, our entry would have been right here. Let me make it bigger. These candles right here. These are the candles that open below the zone. There we go. All right, so my entry's in here. I'm gonna find me 5 pips above the trader zone. At the trader zone is at 20 pips. So I'm gonna put this at 25. I'm gonna find my 1 risk to reward. This would have been your first target. You can put in a line there. You can go set an alert here. Come hit the plus sign here. Add an alert. However you want to do it. That would have been your first TP. The goal is to take it to the next trade zone. When I do that, my risk to reward is a 2.56. So what I'll do is mark up whatever, and your trading plan is dependent upon you. I suggest 20, 30, 50 pips, and then you find halfway points, another 70, another 80 pips, or 100 points, and you keep marking those up depending upon your goals. So once we got the first TP, that ends up being 25 pips. I'm just going to go ahead and go to 50 after that, which would have been right here. And I would have set an alert for there, and that would be my next TP. If I want to go to the bottom, that's 64 pips. And if I'm looking for it to completely break out, I can go to the bottom, that's another 88 pips. And since I have these zones marked off, I can come down here, and that's 150 pips. So I would have set that as my final TP, got into this trade right here once it broke below the zone after seeing this M and noticing all the candlestick patterns, making reversal patterns for a sale, got to my entry here and took this trade short. And this would have took 2 days to hit this target, which was the first trade zone. And it took, let me see, what is this? 1, 2, 3, 4, 5. It took a whole 5 days to come to this actual trade zone. So my first 2 days, I'd have been good to go. I'd have took most of my profit by here, had my stop loss and profit, and just let it play out. And if it comes and hit it, it hit it. If it don't and pull all the way back up, my stop loss is in profit, and I won that trade either way it go. Now on the re-entry, let's say I'm still holding that trade. It comes down here. We're in a new week. Sunday's in. We got Monday. It comes back up to the trade zone right here, plays around inside of it, doesn't break out of it, breaks back below. I take another trade back to the trade zone again. So what's that look like? This candle is the one that closed below. My entry could be the open of that next candle, which will be right here. That's my entry. This actually mapped it out perfect. A few pips above my trade zone. This is a 1-to-1, so my target would have hit right here. If I wanted to take it all the way to it, I could. That gives me a 1 to 1.8 risk to reward. So I risked 42 pips and my target was 50 pips. And that TP is hit. This took, let's see, it did it pretty much in a day. The market closed right here and opened. And then the first few hours of the next day, it hit the target. Right here, we got the same situation where I could have did the buy right back up. It came and hit the zone, bounced off the zone, and came and retested it. Right here, it broke below, and it wicked, and it didn't close below. So this would have been another buy right here on the close of this candle. Stop loss below this candle, below this trade zone, and the TP is right here. I'm gonna map that out to see if I actually would have took that, because if it doesn't make sense from zone to zone, this was kind of perfect though, because it's like right in the middle of the zones. And we don't know that this was going to consolidate like this. So in real time, if I'm taking these trades, and you have to keep everything in mind with every video that we're going to go over for the next few weeks, is only one reason to get into a trade. So I still need to see two other confirmations. This one right here, we have a morning star right here. So that would have made me want to get in that. And I still need to see the W. That's our W right there. It's our first part, bounced up, came down. That's the second part of the W. Do y'all see that? Let me draw that out. I just want to draw that out. But this is our W right here. It's cricket, but that would have been the second part of our W to make me want to get into that trade. Everything always comes to doesn't make sense when I do this part. When I find out my stop loss. Stop loss, I put a little bit below, 5 pips below. Let me see what we got, 42. So I'll go to 47. And then I'll make this a 1 on here. And that would have made me take the trade. If you want to get out early because it actually hit the trade zone, you can. If you want to hold it the whole time, it ended up hitting it way down here. I would always suggest don't wait to take profit over a few pips. You can always take a partial right here and put your stop loss on profit at your entry. It would have ended up taking you out. You'd have been in profit already. I'm gonna move forward where it's out of consolidation because that would have just been back and forth all day. Every time it hit up here, it came down here, hit down here, and went back up there. You could have traded that back and forth all week. Now we got another level coming in. This is another end. This is an M right here. Nice strong M. Came up above the zone, got a big red shift candle. I would have liked to enter just off of that alone. You would have caught this whole next candle down to the bottom of this trade zone. Then we got consolidation. We got a nice shift candle up. And I also want you to, now that you can see it with the indicators, you can see that you still would have been looking for sales because the water's on top. So with everything I just showed, when you line it up together, this would have been showing like right here. We took this sale right here. And I show how you would have mapped that out. The water was on top. Your entry would have been right here. You could have still used the mayo, the blueberries, targets, all the way down to the trade zone. We knew we would have just been looking for sales with the ketchup and mustard in place. Everything was on top. Water, mayo, blueberry on top. So we're only going to look for those sales. Right here with this counter I just wanted to show. We got an M right here. Mayo held it, ketchup, cross, and mustard down, going below the trade zones. All these trade zones are targets at this point. You can take your money here, 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 take it here, however you want to do it. You just keep trading the strategy all pieced together down to these trade zones. All of these became TPs. Up to the current price. Y'all with me so far?
Yep.
Yeah, do not complicate it. It's really that easy. I have a list, I'll reshare it. You just need to have the checklist in your head. Okay, I need to see an M or a W. Where's the water at? Ketchup and mustard cross. Trade zone. It bounced off the blueberry, bounced off the mayo. What's my candlestick patterns looking like from the candlestick Bible? You piece all of that together to get in your trade. You only need to see 3 of them. Once 3 of them make sense, you're good to go. And then the whole, what phase am I in? Consolidation, stop hunt, my entry, my pullback to my mustard, reversal for the end of the day. You piece all of that together for more confirmation. And use this along with the scanner if you're using the scanner as a newbie and you're waiting for that ketchup and mustard to cross and the water's in the right place. Let me go back to the 4-hour chart with that. Yeah. It was this point. On the higher time frame, the water was on top. We didn't get any crosses. We just knew the water was on top. The real goal is to break down to at least an hour and lower time frames if you're a lower time frame trader. I look at the 4-hour. So unless you're that type of trader where you're on the 4-hour chart, that's going to take way more time for your trades to hit because these are 4-hour candles. So unless you're on that level of being like a positional swing trader, you're always going to break down to a lower time frame anyway. And there's going to be more trades given from the scanner because of the lower time frame. So since we already marked up on the 4-hour, we're going to go down to the 1-hour and look at every time we saw a sale with it breaking below our trade zone. This is where we pretty much started at, where it was consolidating and made that big M appear, consolidated, and then it started making M's. Every time it came up here, it would reject back down. It wasn't breaking these highs. So this was our final M. I would have traded this just off the trade zone alone. But if we wait for the scanner, now we're good to go. We got our trade zone marked up. We're below the trade zone, so I already did the whole, is it going to break above or below part of it? We got that part out of the way. 1-hour chart, we see the sales. We can take the sales to the other trade zones. You see it come bounce back to a trade zone here, break right below, and then the scanner did a sale right after. So we got a trade zone right here. It stayed within the box, the channel, broke right below it. So it's below the trade zone again. Scanner went off for a sale, take it right back to the next trade zone. We got one here. It got close to the trade zone and didn't quite hit it. So I'm going to measure that out and see if we can still get 20, 30 pips off of that. Sell right here on this candle. It went as low. It did 21.7. We would have got 20 pips out of this. This was with a 17 pip stop loss when I first put it on here. So we went for the 1-to-1 risk to reward. Wait till it says a 1 right here in the middle. We still would have hit target right here. If I went on ahead and went for the 20, we would have got out with the 20. I suggest, as a newbie, to go for 20 until you get comfortable with it and learn to take better A1 trades, better A1 setups. There was no more sales on that. There was a last sale right here. And that one came to hit the trade zone. So something I'm gonna point out right quick that I would get into in detail in another session is that what I do is I look for where's my water on a 4-hour. The 4-hour water is the 1-hour Mayo. So if I know that this is my water on my 4-hour, I'm trading with the trend of the 4-hour. So when I see it hold the Mayo and the ketchup and the mustard cross down and the water's not in the right place, I'm taking those sales because I'm a higher time frame trader. So for someone that's on the 15-minute chart, you're gonna want to base your 15-minute trades off where that 1-hour water is, basically the Mayo. once you mark up on that higher time frame, if your mayo is on top, when you go to the lower time frame, you can trade off that mayo when the ketchup and mustard cross. The scanner's not going to give that off. That's just something you have to know for yourself. What I do is I have alerts that show me when the ketchup and mustard is crossing on the 15-minute chart, no matter where the water is at. That's an alert you can set up on TradingView. And I have that set up as one of my alerts. I can show that right quick if I go to my alerts. I think it's at the bottom. Crossing up, crossing down. That's the ketchup and mustard crossing on the 15-minute chart. Yeah, turn that on. That just expired. So I'll go into detail with that a little bit. What that looks like to me is when I see this hit this and that ketchup and mustard crosses, mine's is actually on the 15-minute chart. So I'm gonna use this for an example because this would have been a good trade to take down to here, as well as this one. Either one of these, because it kept bouncing off the mayo and it kept crossing down. And as long as your stop loss was out the way, which in this case it could have been above this trade zone, you could have took this trade down to here. So first I'm going to show what that looks like. I'm gonna go right here, right where it crossed. This was a 20 pip, 21 pip stop loss. It was on 20. If I went above the trade zone, it would have been on 30. It's like about 32, 33. It looks like 31 right at the trade zone. And if I went above it to the blueberry, that was 37. That might be a little too much to risk. So I'm gonna go with 20 because with 20 you'd have been hit right here. I'm gonna find 20 pips down there. Okay, is that a one? That's good enough. I'm gonna give a real life example of if I had a did 20 pips. From here to here, it hit that target. So I'm done with that trade. That's 20 pips. I'm taking a partial and put my stop loss in profit. Whatever happens after that, I don't care. And when I say take a partial, I'm talking about 75% of that trade. When it came and crossed again and hit the mayo again and crossed again, I would have hit right here with those same 20 pip stop loss. I'm out the way. This target right here would have hit 20 pips again, and down to the trading zone would have been 53 pips. So I would have took it at 50. And now my risk to reward was almost 2.5 times the amount of my stop loss. What that looks like with the trade zone is hitting the trade zone, and then it's not breaking out. It's holding the trade zone. So I can wait for the ketchup and mustard to cross to get into it. That's going to be, the ketchup and mustard is always going to be your latest possible entry. Everything before that would have been stuff like the candlestick patterns. Held the trade zone, did this big red candle right here. If I'm zoomed out, if I go in on it, that was a shift candle. Came down, hit the mustard, bounced around a little bit. It's under the mayo, ketchup and mustard cross. Could have took it to the water, ended up doing the whole 20 pips when I just showed that earlier. Now we on here with this entry. Did the same thing, came up to the trade zone. It's wicking it and it's not breaking it. It's holding this trade zone. So that's showing me it want to sell. Ketchup and mustard cross right here. That would have been my final confirmation for my entry. Take it when that crosses, and I could have took it down to the bottom of this trade zone. Could have been trading that back and forth all week. That's Monday, Tuesday came in, took another Tuesday and would have been done. Let me see. Wednesday, Thursday came in, nothing happened for Thursday. And you done. You could be done for the week. Now, if you wanted to take this off this blueberry, we got a trade zone right here. Broke above the trade zone and then came right back below. Now it's holding the blueberry. It's lagging. It don't have to be perfect. It broke above the trade zone and above the blueberry and then came right back below. Okay, so now what? We wait. Ketchup and mustard crossed below the blueberry in the trade zone. Oh, that just means that the target is it. We're gonna get into our sale off the blueberry, ketchup across the mustard below this trade zone. Cross right up in there. This has been my latest entry. Put my stop loss about 5 wicks above this wick, up out the way. 1-to-1 risk to reward ratio. It would have came and hit the target right here. You end it right here, stop loss up here, target right here. All 35 pips. Once that hit and I hold it, if I want to keep holding this trade, I could have took it to the trade zone all over again down here. I make that my TP. It didn't hit it till here. So that took 1, 2, 3, really 4 days, a whole week to hit that all over again. Now, in between that, this is how I'm really trading when I trade. Like last week when I got in 2 sales, I was in 2 sales at the same time. I already took this trade off the blueberry. Now we got the scanner giving off another sale. So we're going to get into that too. We're in all of this. We're going to get into the sale. This is the latest possible entry. It went off above that candle. 1-to-1 risk to reward. This is your worst place for your stop loss. It's above the blueberry. It's out the way. When I hit that 1-to-1, it came and got close to it. Came back up to your entry and came back and cleared out and hit the target here. This is 1 hour entries. So you got to have the patience for these to play out for a day or two, even 3 days. I'm still going to go down to the 15-minute chart. With the 15-minute chart, you'll have smaller stop losses, and so you hit your targets and your TPs quicker. You also got to keep in mind that depending on the time frame is how many pips you want to go to. With 15-minute charts, you want to do 20, 30 pips. You get to the 1 hour, 4 hour charts, you want to start going for 50 pips, 60, 70 pips, 100 pips. That's as you work your way up. It depends on where you're at with it. Now, when I took this sale, realistically, this is the M right here. This is the M that made the ketchup and mustard cross, and then it gave off a sale. So as long as it was 5 to 10 pips above that M, that would have been my actual stop loss. That's 29 pips. I can go ahead and just put it at 30 and say, okay, I'm going to do a 30 pip stop loss. Which means if I make my TP 30 pips, that would have been hit same day. Or it was at the end of the day when this signal went off. So by the beginning of the next day, my target would have been hit. That's my first TP. But I still want to take it down to this trade zone. I can go for these other targets. And then if I wanted to go for here and here, I could have set those as TPs and they would have hit those targets. Y'all see that? Anybody but a dead body. Now, why do these look bad? Let's get into it, because these look bad. These didn't, that one might have did something right there, but I want to base these off of the trade zones. What we got is these things breaking below the trade zones and then pulling back inside to it. So that means there's a W right here. So when I see this scanner give off this sell, I know that a W has been made and it's back inside the trade zone. It's not below it. So based off of that, I wouldn't have took these sales because it's holding the trade zone. Ended up holding this trade zone and came back up and hit these. Same here with these sales. This was our first W that's been set. I don't see any M. We got this right here, but it never came and did an M. We got a sell here, but it's still holding the trade zones. Now, if I took little bitty sales, I personally don't do this, but if I took these little sales and took them right to the trade zone, I could have been getting out there, like this sale down to this trade zone, but that's not enough room for me because I noticed here when it did this W, it's holding the trade zone. So there was never no real breakout from the trade zone. We got one right here with this sale. We could have took that. I'm gonna count the pips on that, see what that looks like. Got a sell right here. First entry right there. Bam. Got our stop loss at the trade zone. 29 pips. This right here, barely. This one would have hit for the 29 pips. We could have took that. Been in and out. Still got 29 pips. That's all you need on Euro USD. But what it did long term was when it broke out of the trade zone, it came and shot right back in it with a big green shift counter. Ketchup across the mustard back up, broke above the water. We're not taking that sale. Not based off the scanner. Now, if you advance for the people that trade M's and W's and the other way around, you know we would have been taking these buys. That W set right there, consolidated, never came and broke this low. For all the seasoned traders, I know they see that shift right back up. What I was going over 2 weeks ago. Ketchup across the mustard up, you ain't sure about it, water not in the right place, closed above the water right there, that would have been our entry. And all of these would have been targets. Mayo would have been a target, would have traded all the way up to here. Got close to the blueberry. That's how I would have traded that as a reversal. I had to throw that in for the ones that don't need the scalp or don't trade just off the ketchup and mustard crossing with the water in the right place. You'd have took that right there with the stop below the low, broke above the trade zone, closed above the water. These trade zones became TPs. My highest target would have been this other trade zone. That's along with the blueberry. That would have been a total of 97 pips. It went as high as 69 pips. Let's just say even in 65, we can even go 60. The thing is, once we start to get to 50 pips or more, we've already taken money and we've put our stop loss in profit. So anything after that is extra. So whether they come and hit it or not, we're not worried about it at that point. As long as we got a trade plan and we sticking to it, we're good to go. Now on the flip side, if we start taking these buys off the scanner here, we got a trade zone here and here, and it broke out of this trade zone. So once we notice this, let's say we didn't take this trade. You just observe. First day of the reversal of a trend, the water is not in the right place. So now we on the second day where the water is on the bottom, and then they ketchup and mustard cross, and we seen that it's held these trade zones. It's broke above them. It's buying off the trade zones now. We could have easily took that and traded it this way at that point. But then they held that blueberry, ketchup and mustard cross down, broke out of the trade zones. All of these right here became targets. Now we got the scanner giving off sales again here. Got a sale right here. Green candles. So those are for the open of the candle. Let me zoom. What this thing do? We almost could have got a whole nother buy all over again. Oh yeah, no mind. Yeah, I could have took that again. Gold just basically bounced off the mayo and went right back up. All right. Sell right here. Closing below the trade zone. These are the targets now. We got a target here, target here, and way down here. So let me find where my stop loss would have went. We're going to put it above the water. We could have went for 20 pips. It's above the candles that made the ketchup and mustard cross. So I'm going to test out to see. First, I'm going to do that and say, okay, there's only 15 pips. If I want to be safer, let me see what it looks like above the water. Okay, I could put 20 pips. It looked good at 20 pips. I'm good to go. We got a stop loss right here. So now we're going to find our one risk to reward right there. It would have been a sale right here, and the first trade zone would have been right here, and our one is right below it. So at the trade zone, we can get out, or we can take profit, partials, however you managing your trades. So now I want to take it to the next trade zone. Well, now we're at a 1.3 risk to reward ratio with a 28 TP with a 20 stop loss. Well, let's go down to the next one. Now we're at 39 pips for our TP. And if I go down to this one, we're at 76 pips. So by the time it hit 50, let me see, where was the 50? 50 pips would have been around here. That would have been this candle right here would have hit it. Anything after that is just extra. We would have hit all those targets. This is an example of there's no trade zones below this anymore. This would be the reason why I would go back in time to find trade zones below this area, because now we're at current price and there's no trade zones below this point of the chart that I have marked up. That's why I will go back first. I will hit my 4-hour chart. This is what it would actually look like if I was actually doing this. I know that this is the last spot I was just at. I could save this spot right here. Let me see, I'm gonna put me a line right here. And I'm gonna go back in time and see if I can find candlesticks on this line. Once I do, I'm gonna look for the Friday. Friday, 1, 2. This one I'm gonna zoom in on it. This is the Friday closest to this line. This is a small body. I can come up here and mark the bottom of this. And now when I had this trade zone and that was my last target, I now have another target now. I can start to go back a little further, go back a couple Fridays. I'm gonna do this about 1 or 2 more. Let me see if I can find me a good one. I'm just looking for Fridays. I'm gonna go for a Friday down here. Let me see. Friday right here. We got a Friday right here. 1, 2, bam. This candle. This is a good one. Nice big candle right here. Mark the top of that. Now, the reason why that was important is because we're at current price and this look like this can sell. So now we have new targets. If we wanted to get into this sale, we could have got into this sale today. Let me see. 4-hour chart. I know the 1 hour gave off a sale. Actually, it just gave it off an hour ago. So long term, if I wanted to get into this sale,
I'm in that sale too.
that's what's up. Off the trading zones itself, that would be targets. It should come back to those trading zones. It will at least get close and somewhere turn around if it don't exactly hit them. And so that means somewhere along the way, I'm going to hit some targets. I'm definitely going to get 50 pips. This is like an easy 100 pips. I'm going to put my forecast up. Now, I almost want to get in this. What I will do is if I notice sales, I'm going to take these sales. So you're hearing it here now. We're going to take these sales, and this is going to be our ultimate target. I'm going to send an alert on that right now. Ain't no telling how long they get. That might take a month. Ain't no telling. But we just analyzed it here. So, all right. If I take this sale right now, my stop loss, I can go above this trade zone right here. It's close to it. I always want to find a box. So this is the first one. I could go above that. But if I find the box, I can go right above that. And I could just do 5 pips. With this, I'll go straight to 30 pips. 30 pips. So I'm going to find my 30 pips down here. That would be my first target. That means it would have hit this trade zone. This trade zone is our real first target. And then we can come down to this one. And we'll be looking for it to go way down there. That's why we're going to go back as far as we can. Only when we run out of trade zones to hit. I always do that because I still mark up gold like that. When I notice there's no more trade zones, I go mark them back up. If I'm in current price the way this is right now, and I got all of these trade zones marked off, I don't necessarily need to keep doing it. I'll look, and if they look close to the other trade zones, I'll just leave it alone. As long as it's giving me a general zone to work with, I'm good with that. Now, I did this using the scanner. I showed a few of them of how I would trade not using the scanner. Like, for example, this came here. This is a big W. It held that trade zone, broke inside. Ketchup and mustard crossed up. That means the water not in the right place. I can take these trades because I know how to trade like that and use the water as the TP and these other trade zones as TPs. That's the TP. That's a TP. I could have used the Mayo as one. And then it would have hit all these previous trade zones going the opposite direction. Every time it bounced off of this trade zone right here, I could have took these buys. It came and crossed back in and took it up to the next one. Bounced off it right here, took it up to the next one. Came and did that again. It's lagging, ketchup across the mustard right here. It don't matter where the water at to me. I'm taking it back up to here. There, all of those was hit. All of those was TPs. Came close to it again right here and held it, W, ketchup across the mustard right there. All of those is targets. With everything I just showed, same concept. The only difference is this is when you know how to trade and you're not worried about the water because you're looking at the M's and W's, you're looking at the candlestick patterns. That's already two reasons to get into a trade. Is holding the trade zone. That's the third reason. And then that final confirmation, just waiting on the ketchup and mustard to cross if you need to get that far with it. By the time I see stuff like this already, we trading it. And we're using the water, the Mayo, the other trade zones as targets to get in and out. And this when it went all the way up to the blueberry. Once it hit that blueberry and I know it got a high chance of not coming up there no more to reverse the sell, then I can just trade off the blueberry. And now my new targets become the trade zones going down for the sales, which is what it's been doing now. That come with time and patience. Start off with trading where the water is at. And when you master that, then you can start trading the other way around. You can keep it simple because the goal is not to trade every single day. It's to make accurate trades when you do trade. So yeah, you'll look at the charts every day, but that don't mean you got to push a button every day. If you can master that part alone, that's going to make you way more profit. That changed for me a couple of years ago. I don't trade every day like I used to. I'm not putting nothing in there every day. There's some people on here that can tell you that every day I had to push a button. And that didn't always work. And now I was mainly trading on the 15-minute chart doing that. Now I look at the 1 hour and 4 hour most of the time, so I get the overall idea where the trades are going. So it's the same. I could show the same thing on the 15-minute. It's the same concept. The only difference is you're going to see the ketchup and mustard cross sooner, and you'll notice those W's. That's a little W beforehand. And you'll see the M's and the ketchup and mustard cross sooner than the 1 hour, 4 hour chart. That's the only difference. We're going to a lower time frame. So something like this hits the trade zone, it comes below and then comes right back in it, and the ketchup and mustard cross right there. Well, what does this look like to me? Well, to me, I see the shift candle, I see the W at the bottom of the chart, and then the ketchup and mustard cross. And then if I still wait for it to get above the water and put my stop loss down here, all of these targets would eventually end up hitting because it went up. I'm going long position. I'm going to do the buy. And I'm going to do the worst case, candle close above the water. And I wanted to wait on that. And I go find my stop loss right here. That's around right at 30 pips. I can put a little bit below, go 30. I'll keep it 34. And I can make my target 34. As long as that risk to reward is a 1, that means they're the same. So if I had to hit this here, this was only the next day, because this is the 15-minute chart. The day ended right here, opened again, and it hit it up here before the day closed again. That's my first trade zone. So it got close to it there. On the third day, it came and closed above. So if I want to start using the other trade zones as targets, I could have went there. And it hit it up here. And just kept on going after that. That means every time I saw a W and the ketchup and mustard cross up off of these trade zones, I could have got into a trade. So we held the Mayo, ketchup and mustard cross going up, closed above the water, above the trade zone right here, you can't make this stuff up, man. Right here. That would have been my entry. Long position. Put this on my entry where the candle closed. Bam. Adjust my stop loss to be below the W where the ketchup and mustard cross. It's below the mayo. That's 11 pips. That's an 11 pip stop loss. Because off the mayo, so we know it's going to give out way more than that. But if I want to come in here and find 11 pips for my TP, that's the one. The risk to reward ratio is a 1. It would have hit right here. Let me take it to the next trade zone. Bam, right there. Right with the blueberry. It hit that right up in here. That's 35 pips from risking 11 pips. I got a 3 to 0.2 risk to reward ratio. That means if I would have risked $10, I'd have made at least 30. I'm getting 3 times the profit. And you would have did that every single time. You could have did it right here. Same concept. It's making a W and it's holding this trade zone. So when that ketchup and mustard crosses up, those are entries. So my worst entry is when it closed above the water, right here. All right, actually right here. This is the first time a candle closed above the water. So I go and I put my entry right there, and then I go find the bottom of this W right there, risking 17 and a half pips. We could just make it an even number and go to 18. And that means I can go for 18 pips, which is right here. It would have hit that right there. I could have took it to the blueberry. Up to the blueberry is a 23 pip TP. So now my risk to reward is 1.3. If I'd have took it to the next trade zone, that would have gave me 27 pips and only risked 18 pips, a 1.5 times risk to reward ratio. So if I risked 10, I made 15. I risked 100, I made 150. I risked 1,000, I made 1,500. So forth, so on. All depends on your lot size. And you'd have traded that until it went wrong. That's another key to remember that as well. If you buying water on the bottom, you keep doing buys, you're going to trade that until it loses. You trading with the trend. Trade that till you can't no more.